All right, judges, I present to you Lindenwood University, our second contestant today.
Ready. So when discussing the policy, we came to the conclusion that the government should not bail out the banks. Alrighty. So our general idea here, philosophically speaking, is that we have a contract, or the government has a contract with the society that it governs. If it's going to violate this contract, which it can do in really crazy situations where the consequences of not violating it would be awful, but if it's going to do that, it has to have a really good reason to do it. It has to be for the greater good. But this clearly wouldn't be the case in this situation for other reasons that will be explained later. So therefore, we think that the government shouldn't do it. So consequentially speaking, this is going to have bad long-term consequences. So if you're a consequentialist, you should be opposed to this sort of government intervention for reasons that will be explained later. Deontologically speaking, I think it was Kant that said people should not be used as a mere means to an end, but ends in and of themselves. Well, we're screwing over future generations by intervening in this sense, because it's going to incur debt, and that debt is going to be passed on to future generations of Americans, and we're kind of using them as a means to, some, I guess, financial security that, is short term. And then the public really shouldn't be held liable for the bad decision making of millionaires. So I know there are people who have deposits over $250,000 in those banks. But I mean, like I said, if we're going to bail someone out, if we're gonna make sure that these people get their money, it should be for the greater good. But what we're helping out really when doing this is millionaires and billionaires who have millions of dollars in the bank, and we're also not really doing that great of a thing. We might be avoiding a recession that's predominantly going to affect working class poor people. But like I said, if the government continues to do this, it's going to incentivize them to do it in the future, which is going to lead to worse long-term consequences for working class Americans in general.
So going along with the Silicon Valley Bank specifically, from what I heard, that bank was a lot of technology startups actually had a lot of loans from that bank, so by them having to close did impact them. But for the most part, those startups didn't have much more than $250,000 anyway, so I don't think that's going to impact that area of the economics for that reason. But kind of like Caleb already touched on, the opportunity cost of it, where basically if we're saying we're going to give this money to these people because they invested it, I understand that, that's their money, now it's gone. But that's the opportunity cost taken away from something else. So we are now impacting future generations by going farther into debt as the government. So I think that is another reason why we should not do that. Do you want to go?
People can say that probably the international impacts would be wide, but these are smaller banks that we're dealing with, and on the long run, like Caleb had said, this will incentivize banks to not have the accountability that they should be under the rule of law. And government interventions historically, whenever they intervene in the economy, they actually cause longer recoveries and longer recessions. So in the long run, it is better for the government to step away from that and let the economy recover by itself. As I said earlier, the government interference disturbs competition of banks, and it needs to be bound to their own rules.
So as has been touched on a bit already, the idea of bailing out the banks for over 250K investments has some serious feasibility issues. Firstly, while bailing out a single bank's investments over 250K may not create too great a burden on the federal government, banks rarely fail in single numbers. Where one bank fails, another will, if not immediately, then in the future. And bailing out this bank will create an expectation in case of future failures, which will lead to greater overall expenses in the long term. Additionally, long-term bailouts, as Caleb mentioned, will add to federal debt and create a burden on future generations for financial decisions recklessly made that were not their own. And in terms of personal liberty, bailouts generally represent an undue intrusion of federal power into the free market where it need not exist by necessity. The simple fact of the matter is that allowing for failure is an integral part of capitalism. It's creative destruction. Without the death of the old, new, better institutions can't rise to take their place. And on a simple principle of the rule of law, citizens expect the government to hold to its word. The government did not promise in this situation to bail out for more than $250,000. It promised $250K. If individuals decided to invest in this bank over that amount, that was their own reckless decision making. And while they have the right to make that decision, the opposite side of right is responsibility. We reap what we sow.
Thank you, that's all.
Thank you.
Okay. I got a question for you guys. Very good presentation. Just want to know the rule law, in this case is the 250K. If depositors, they know about this rule law and they're willing to take a risk, they'll deposit over this amount to mediums in this case. So does that mean the rule of man is over rule of law in this case?
In the sense that individuals have decided to surpass what the law guaranteed them, I would say that's fair. I think on a larger scale would be rule of man if the government decided to incentivize that by bailing out for more than $250K.
Okay. Good.
I really like that you gave a deontological and a consequentialist argument for your position. That's great when those two approaches both agree, but sometimes they don't. So if it turns out that in this case, you become convinced that actually, by not bailing them out, it's actually going to cause a bunch of mid-sized banks to fail. And what we could do instead is just bail Silicon Valley out this one last time, and then make sure that in the future banks have better reserves or something like that. That is, break a rule once because it will have better consequences, even though it's against our own rules. Would that change your analysis at all or not?
Yeah, so I don't think anyone's an absolutist about their, I guess, normative positions. It kind of depends, like how certain are we going to be that, it will be the case that a situation like this will never happen in the future. I mean, there's a lot of uncertainty there. I think what's more likely is that the government will continue to intervene in ways that it shouldn't, and it will make our economic situation worse in the long run. But like you said, like if what you're saying is correct and we knew with absolute, like 100% like surety that this would never happen again, oh yeah, I would definitely say that it would be worth violating this principle this one time to prevent all of that suffering. And we also have to keep in mind that, internationally there's going to be quite a bit of suffering because we have such an integrated economy nowadays. So yeah, we need to keep the suffering of those people in mind too. And yeah, if it could alleviate that, yeah, I would say so.
So I know you said going beyond the 250,000 could add to the national debt and could mortgage the future of other generations. So what if the government were to claim that the FDIC has enough money to bail them out without necessarily adding to the federal debt? Would that change your position regarding when you talk about the greater good in this case? Will that in any way, if it's not going to add to the national debt, and if the FDIC has enough insurance money to pay beyond the 250 or to bail them out, will that in any way change your position?
Probably not, and the reason why I would say no is because there's going to come a point in time when the FDIC doesn't have enough money to bail them out. So we got to have these long-term considerations in mind. I think, like, Americans are very myopic. We're worried about, because a lot of us are living paycheck to paycheck. We're thinking, oh, how are we going to make it? What we don't think about is the long-term. A lot of people don't have a lot of money saved for retirement. I mean, that's a huge issue in this country. So that's what we need to start focusing on is the future generations, and our future selves ultimately. And I think that long-term speaking, yeah, this would be a bad decision. And since the long term is, much greater, hopefully, than the present moment is, and the immediate future will be, I think that we should opt to not bail them out.
All right, thank you very much, Lindenwood. So watch your steps, get down.